Blascak.
Mario Blascak, World Business Press Online. President Draghi, my question is linked to the decade of low interest rates and ultra easy monetary policy. It's been a long time that the rates are very low, and you are giving signals to markets that they are going to stay low for a prolonged period of time. So in this environment, let's say depositors lose their patience, start to withdraw the money from banks, bringing their loan deposit ratios far above 100%, making banks fully dependent on money from ECB. Do you have any contingency plans for such scenario? That's the first question. The second one is rather theoretical. I know that your mandate is clear. Your mandate and your target is 2% or not. 2% inflation target is very clear, but there are some calls, especially from the Bank of Japan recently. They might be thinking of revising their target to, let's say, 1% inflation. What do you think? What are your thoughts about this? Would that be possible for the European Central Bank to revise their official target? Thank you.
Thank you. Well, to your first question, we have no evidence of withdrawing of deposits from the banking system. We actually have opposing evidence from central banks of other countries where interest rates became more negative than they are in the Eurozone, and they don't experience any withdrawal of deposits from the banking system. Also, again, we shouldn't forget the experience of other countries like the United States, which they had zero interest rates for, I never remember whether it's 7 or 8 years. So in our case, we started decreasing interest rates in November 2011, but still at a fairly high level. So our experience is much more limited with that. On your second question is being asked several times today. I mean, why don't you revise the inflation target? Now, there are two schools of thought. Some people say we should revise it downward and simply accept the fact that we'll never reach 2% and we should take 1 or 0. And some say, oh, you should revise it upward and go to 3% or 4%, because in this way you will elicit expectations that you will go up with your policies. Now, the ECB position has been basically contrary to revising the inflation rate objective either way, and the reasons are different in different cases. Well, the revision upward, frankly, would test seriously our credibility, because people would actually say, how come you want to go to 3% when you're not even able to reach 1.5%? So that's, and by the way, each revision on both sides, undermines the credibility of the central bank for different reasons, but it undermines the credibility of the central bank. That effect by itself would raise the risk premium, and in so doing, it would increase real interest rates. It would go against the objective that we have of price stability, but also against restoring growth. In the case of accepting a lower inflation target, this effect would be immediate. We would have an immediate increase in real interest rates, and therefore a further drag on the recovery and the return to inflation. And also there are many other reasons why in the late 90s, all central banks of major monetary policy jurisdictions decided that 2% was the right objective and the right target. We discussed these reasons on many occasions, especially so in a monetary union, where where you're losing flexibility in the exchange rate, you will have to have adjustments in wage and prices that are sticky downward, and so you need a cushion for carrying out these adjustments. So the reasons for keeping this objective are overwhelming, and they work in both directions.